Namaste, good morning. Welcome to the session where we are understanding the practical aspects of assessment of firm. On the theoretical end, we understood the mode of computing interest on capital and remuneration to partners. Okay, the two important things are interest on capital. The two important things are interest on capital and remuneration, which is said in section 40b. From the practical understanding of the firm, that becomes important. And then the other provisions like capital gains has lot of provisions about firms, conversion of firms, partner introducing capital, dissolution of a firm, or company converted into LLP, like that. I asked you to remember in set off and carry forward something. In the case of reconstitution of the firm due to death or retirement of a partner, in the case of reconstitution of a firm due to death or retirement of a partner, the loss pertaining to the retired or deceased partner cannot be carried forward by the firm. Okay, such portion of loss. That provision is only for loss, not for unabsorbed depreciation. So the complete theory we had, and we did some AMT questions. Now we go into 75 to 90%, 75 to 90% PGBP oriented. That extra one or two adjustments which will be firm oriented. Majorly it will be PGBP. So again we are coming back to that chapter to a larger extent. Okay, right? Before progressing, I want to just recollect one more point. What did I ask you to remember about amendment of partnership deed?
It's effective from the date of retrospective.
Sorry. Yeah, go ahead.
Retrospective effect only. Whatever changes made to the partnership deed, that is applicable only retrospective.
You're wrong, Hari. Tapa reverse solving.
Only from the date of
prospective.
Yeah, only from the date of that amendment. Whatever amendment, suppose on 1st July I am changing, because that is a repeated question for us. Amending the interest provision, amending the remuneration. Only for the 9 months I can do that. Though the partnership law says you can amend retrospectively, and we might amend retrospectively, but for income tax purposes, only prospectively. Okay, right? Let's go and understand the questions. The profit and loss account of a firm is as follows. Compute the taxable income of the firm and tax due thereon. Assume that the firm is not opting for presumptive computation, prefers to maintain books and get them audited. On the credit side, gross profit, rent received, interest on government securities. On the debit side, establishment expenses, interest on capital to partners at 24%, interest on loan to partners at 20%, interest on loan from spouse of a partner at 18%, municipal taxes on paid on house property, donation to NCF, remuneration to partners, interest on money borrowed for investing in government securities, GST, net profit. Out of the total municipal taxes of 10,000, out of the total municipal taxes of 10,000, 6,000 was due on 31st March and the same was paid on 31st May 22. GST includes a sum of 10,000 payable on 31st March. half of which was paid before 31st July and the other half in September. The due date applicable for the firm, please strike it off, it is not. They have not opted for presumptive computation, maintaining books, so it's October. Remuneration and interest to partners was as specified in the deed. Please read through the question. Before taking the pen, we are sure about what we are going to do. Step 1, computation of business profit. Step 2, total income. Step 3, tax. This is the flow always. Okay. Business income computation, have it as a separate main working, followed by the total income, followed by that tax computation. Okay. On the credit side, rent received and interest. Rent received goes to house property chapter, interest goes to IFOS. On the debit side, interest on capital to partners at 24%. What percentage is allowed? 12 percentage is allowed. 12 percentage is allowed. Interest on loan to partners at 20%. That is also 12% only allowed. The 8% will be disallowed under section 40A subsection 2. It is payment to relatives in excess of fair market value. Because partner is a relative and fair market value for this purpose is, had the partner contributed it as capital, he would have got only 12%. Just because he is bringing it as loan, he cannot enjoy extra. So that 8% disallowed is under 40A subsection 2. No. No, I'll. Establishment is salary, other things. Interest on loan from wife of a partner at 18%. Here it is fair market value. Always assume 18%, up to 18% as fair market value. Unless they say that it is in excess, you can always write an assumption that it is assumed it is within the norms. Municipal taxes on house property. Okay. Right, I will come to that when we do house property. Donation, remuneration, interest on borrowed, GST, it is paid within due date because he is not maintaining book. The firm is the firm is not opting for presumptive computation. Get them audited, so the due date will only be 31st October. 31st October will be the due date and they have paid it in September, no problem. Let's start working the business income part of it. Yeah, you can go by the traditional method of add inadmissible expenses, less, etc. Or write the word adjustments, which means both addition and deletions, so that then and there you can make the adjustment. Excess interest on capital. Maximum as per law is 12%. The balance 12% shall be disallowed. Shall be disallowed. 48,000 divided by 24 into 12. According to section 40A subsection 2, payment to relatives should be at fair market values, where it is in excess of FMB. Such excess shall be disallowed. Where the payment made is excess of FMB, excess will be disallowed. Interest on loan to partners, the fair market value will be 12%. Had they contributed as capital, it would have only been 12%. So 12%. Excess 8% to be disallowed. So what is that? 20,000 divided by 12 into 8. I'm sorry. Interest to spouse of the partner will also be covered under 40A subsection 2. It is assumed that 18% is FMV, hence no disallowance. Municipal taxes. Let's see. Taxes on house property, entire 10,000. Donation to NCF 5,000. Remuneration to partners 2 lakhs. Interest on money borrowed for government securities 10,000. GST. Whole amount is paid within. But yeah, after finding out the book profit, let us do that. We are disallowing because it has nothing to do with business. Interest on money borrowed for investing in government, you can allow it in IFOs. Government's interest received from government securities is not a business income. So interest paid on amount borrowed for investing in that is not a business expenditure. Now the answer you get is known as book profit. Now the answer you get is known as book profit. I'm getting 2,80,000.
Sir, will GST paid be claimed as expenditure, sir?
GST paid can be claimed as expenditure provided input it is not what I say, it is recorded as income. Sometimes along with GST they will record it as income and the whatever paid is expenditure, or it is paid under a different scheme of composition scheme etc where you cannot take it as an input etc. That's why.
Okay, sir. Thank you.
In normal circumstances it's a liability and it has nothing to do with P&L account.
Okay, sir. Thank you.
Maximum permissible remuneration for partners. Maximum permissible remuneration. The law says either as per act or as per deed, whichever is less. As per deed, amount provided in P&L, which I take it as 2 lakhs. As per deed, 2 lakhs. As per act, okay, 2,80,000 into 90%. Okay, up to 3 lakhs, 90% of book profit or rupees 1,50,000, whichever is higher. Here 90% will only be 160 varakuna, that 150 will be higher. After that 90% will be higher. So 280 into.
Sir, sorry to interrupt, sir. Total already check பண்ணுங்க. Book
Total
profit.
is wrong. 280 is wrong.
மேல அந்த நெட் ப்ராஃபிட் எடுத்து நம்ம
எடுத்திருக்கேனே ஹரி.
ஓகே சார். சாரி.
Yeah. Okay.
Sorry, sir.
No. So whichever is okay. So 252. The overall is whichever is less. So this should not be confusing you. This should be whichever is higher amongst these two things. Okay. Whichever is less. So 2 lakhs. Business income. So this is the computation of business income. 115, add 24 excess interest on capital, excess interest on loan to partners, municipal taxes, donation, remuneration first add back, interest and the whole of GST, non-business income like rent and municipal interest are taken off so that I get my business income. House property, rent received. Rent received is 60,000. 60,000 less municipal taxes paid. Less house property. Rent received is 60,000 less municipal taxes paid. Okay. Okay. Yeah. I'm waiting so that you are completing and hitting at this point. House property chapter says municipal taxes will be allowed as deduction only if it is paid within that year. I will give you a difference treatment, differential treatment. If the building is used for business, municipal taxes due paid within the due date of filing return, it will come under 43B. House property chapter section 23, computation of annual value, where it is said municipal taxes will be allowed as a deduction only if it is paid within that financial year. If it is due but not paid, in the year of payment, take deduction. Even past period municipal taxes paid during 21-22, you can take deduction. But municipal taxes will be allowed as deduction only if it is paid within the set financial year. Whatever is paid in 21-22, empty paid according to section 23, empty paid during the said FY for us 21-22 will only be allowed as deduction. Where it is due but not paid, then deduction will be in the year of payment. In this case, what happens? Out of 10,000, 6,000 was due on 31st March. So how much has been paid in 21-22 is 4,000. Only 4,000 is paid in 21-22. 6,000 is due as on 31st March 22, which means it is not paid in the financial year 21-22. Only 4,000 can be claimed as deduction. Okay? Nararaja? On 31st March 22. May 22. Financial year 22-23. So, only 4,000. Are you clear? That is the differential treatment of municipal taxes. If the property is used as a building, then 43B, any taxes, duty. But here, it is different. Net annual value, standard deduction at 30% under section 24. So my house property income, as I said, house property will keep covering in various chapters. Okay, 39 to 100 is our house property income. Are you clear? Our gross total income is 141,200. Our gross total income comes to 1,41,200. Deduction under section 80G, 100% of contribution to National Children Fund. Whenever you use the word the national is used, please be sure it will be 100%. Whenever the word national fund is used, Prime Minister's National Relief Fund, National Blood Transfusion Fund, National Defense Fund, National Children Fund, National Fund for Eradication of Poverty, like that, whenever they use the word national, be sure it will be 100%. Easy to remember word is national. Firms are taxable, flat rate of 30%. I don't understand. Yes, yes. Firm 30% flat rate. Sudha, are you there?
Yes, sir.
Should I work out AMT?
We haven't claimed any deduction under
Fantastic.
40 AA, sir.
That's the answer. That's wonderful. We haven't claimed anything. Compute tax payable. Our mind should open up for AMT also. But if we don't claim 35 AD, 80I or 10AA, that is not needed. Company, companies, individuals. Such as also single rating firm. I'm looking into question number 7. P&L account of a firm for the year ending: sales, rental income, agricultural income, cost of goods sold, remuneration to partners, interest to partners, municipal taxes on house property, other expenses, net profit. Out of the interest paid to partner, 10,000 is not deductible. Out of the other expenses, 18,400 is not deductible. On 15/1/2022, the firm pays outstanding GST of 54,700 of the financial year 2021, which is not debited to the above P&L account. Should I reduce it? Yes. 43B says it should have been paid before due date. So last year this would have been disallowed. Financial year 2021, they should have paid before September 21. They would have disallowed. 43B says whatever is disallowed will be allowed in the year in which it is actually paid. So on 15/1/22, the firm is paying. On 15/1/22, the firm is paying, which means it is paid in the financial year 21/22. In our income tax adjustment statement, we will reduce it. Last year, they would have, in books of accounts, they will follow mercantile basis of accounting and allow it in the respective year. But here I will allow it. Brought forward losses or business loss and LTCL. The remuneration to partners is as per the deed. Compute the income of the firm. Your time starts now. First compute business income and let me know. Huh? Total income. The first business income. Yeah, we are going to do total income and tax also, but I just want to understand what's your business income. Perfect. One minute, I'll check the answers. I'm also doing. I'll check the answers. Nothing. Yeah, business income is right, Sudha. Illa Matthew, Saji. Illa Aranganayaki. Agricultural income is not business income. Correct, Hariharan. What's your total income and tax? Total income. Agri income is not taxable, no, isn't it? Okay, okay. Agri income aggregate பண்ணக்கூடாது அது இண்டிவிஜுவலுக்கு மாத்திரம் தான் பிகாஸ் ஸ்லாப்ன்ற ஒரு சிஸ்டம் இருக்கு அதனால தான் I said agriculture income you need not even consider for firm or company only for individuals that aggregation step 1 step 2 because they'll skip slab but here it is flat rate which is what is that no நீ வந்து பிசினஸ் லாஸ் அட்ஜஸ்ட் பண்ணல பாரு ஆண்டோனியோ இல்ல ஷரத் இல்ல ரொம்ப அதிகமா வருது ஷரத் this is my business income computation huh yeah here the computation of total income is here Of course, LTCL is as it is carried forward. The balance business loss to be carried forward is this. Are you clear? Right? You got the answers, Antonio? Messrs. Nagdiwala Enterprises, a firm constituted by a doctor and non-doctor engaged in running a multi-specialty hospital, seeks your opinion in the context of the provision as to the allowability, chargeability of the following transaction for preparing its return. It is not computation. It is every case we have to individually say whether it is allowable or not allowable. It is not a computation question. Okay. So every case wise we need to understand whether it is allowable or not allowable. The okay seeks your opinion in the context of provision as to allowability or chargeability of the following transactions. Okay. Case A, depreciation was not charged on the instrument imported from UK for rupees 2 lakhs, cleared by customs on 22/3/2022 on payment of duty of 1 lakh and installed and ready for use on 26th March 22.
Mandatory, sir, because 31st March depreciation. 31st March is the concept of depreciation.
Can I
So
claim
should be allowed.
depreciation? Yes.
Yeah, it is mandatory, sir. It is mandatory.
Mandatory. Good, I take your answer. In this case, can I claim?
Yes, sir.
No, we are. I understand
It
your
is put
answer.
to
I
use,
go
sir.
with your answer. I take all your answers. But what is the examiner trying to test me on?
Imported machinery, sir.
Once more, 1 minute. Yeah, Sudha.
Imported machinery.
Import, no.
Whether duty will be
No,
reduced.
Sir, it is less than 180. Less than 180 days, sir.
Less than 180 days. That is, the whole point is here, my dear friends. Put to use means ready for use. I take all those answers. One, depreciation is mandatory. Two, less than 180 days. So 7.5% can only be claimed. Third is, 1 minute, here there is a, okay. So coming back, one, it is ready to use, means put to use. Second, yeah, 7.5% can be claimed and depreciation is mandatory. Yeah, okay. And this 1 lakh will form part of cost of machinery. Okay, so 3 lakhs will be the cost of machinery. 7.5% depreciation can be claimed. If it is ready to use, it is deemed to be put to use. Okay, the term put to use means ready to use. Once an asset is ready to use, depreciation needs to be claimed on such asset. In the given case, it is ready to use from 22nd March. Hence, only half of the eligible depreciation can be claimed. The book profit calculated as per section 40B are 3 lakhs and payment to salary to working partner was 1 lakh. Clause for payment of salary to working partner though appears in the deed, but the same is silent as to the quantum or the manner of distribution.
Even if the deed is silent, the provision for salary exists, so it can be allowed.
Okay. To make things clear to you, Ananya, yeah, people here saying nil, that's the answer. I'll tell you why. Deed should either specify the quantum or at least as a percentage of profit, as a percent, or the provisions of 40B can be incorporated. Whereas here, the same is silent as to the quantum and the manner of distribution as percentage, etc. Which means it is like saying, suppose a parallel example I take, interest on capital can be paid to partners. If this is there in the deed, the answer is you cannot pay interest because either as per act, which is 12%, or as per deed, which is silent, 0, whichever is less. Similarly, remuneration. At least they should have specified it is as per 40B, then Anil Hardware case comes to our rescue. Or they should have said this is as a percentage of manner of distribution. If the deed is silent, clause for payment of working partner though appears in the deed, but the same is silent, you cannot pay. According to section 40B, okay, maximum permissible remuneration is either as per act or as per deed, whichever is less. Where the deed is silent as to the quantum or manner of computation, then it can only be assumed that the remuneration as per deed is nil. Hence, assessee is not eligible to claim the same.
The answer will be different if it is mentioned that no,
One
it is
minute,
as
one
per
minute,
the
one
income
minute,
tax.
1 minute, Hari, 1 minute, yeah. That is not a duty, that is expenses. So, yeah, I got your point. Yes, you cannot. Yeah, go ahead, Hari.
Yeah, if the answer will be different if it is mentioned that it is as per the income tax act.
Yeah, yeah,
The
the
deed is
answer
as
will be different.
provisions.
Then they can claim that up to 90% they can claim. You say payment of duty 1 lakh, is it IGST portion, etc. Unless the question says specifically, don't take it so, you take it as the cost of. C. Salary 40,000 per month paid to the wife of a partner for working as an anesthetist. The normal salary of an anesthetist in the town is 7,500 per month. Payment to
48
relative 40A subsection 2. According to section 40A subsection 2, any payment to relative should be anything should be at fair market value, where it is in excess of FMV. Such excess shall be disallowed. In the instant case, spouse of the partner, relative, is the purchase of medicine in cash. Revenue expenditure of 10,000 incurred for promoting family planning amongst its employees. Allowed. Okay.
Family,
திருப்பி
sir,
சொல்லு.
accessories
அப்படியே அந்த செவுத்துல. Yes, friend.
allowed only for corporate accessories.
Yeah, very good answer, Ananya. Allowed only for companies. அவன் சொன்னா இந்தியன் கம்பெனிஸ் so allowed ன்னா அங்கதான் எனக்கு கொஞ்சம் கஷ்டமா இருந்தது. Okay, you can tell it wrong. You are telling the provision correctly. Not allowed for a firm. Interest of rupees 3,000 paid on overdraft of 1 lakh taken for payment of advance tax. Not allowed. Interest on loan taken for payment of income tax, any form of income tax, okay, shall be deemed as interest on income tax. Hence, it is not allowed. So a theory answers, case-wise answer. Okay. Biggest benefit we get is every case will get 2 marks, 3 marks. It's not a comprehensive answer. So even if I don't know one, still I have the possibility of scoring maximum mark out of the remaining. Question number 9. HSP, a partnership firm engaged in the business of running a heritage hotel approved by the authority, provides the following information relating to the financial year. Net profit after considering the following: depreciation on hotel building having written down value of 500 lakhs was charged by treating the same as plant and machinery. What is the rate for building? What is the rate for plant and machinery? 15. So
50.
excess 5% should be disallowed. To 500 lakhs into 5% because they considered it as plant and machinery. It's not so. So we should disallow. Expenses on 1 lakh for promoting family planning, fully disallowed. It is a firm. Payment of 50,000 for an advertisement published in the souvenir of a political party, disallowed. This will be considered under 80 GGB. This will be considered under 80 GGB. Compensation of 1 lakh paid to the suppliers of automatic kitchen appliances because of termination of contract, after receipt of 50% of appliances.
Allowed, sir.
Allowed. It is a proper business expenditure. Okay. For the recipient, it is an income. For the recipient, it is an income. For the payer, compensation or not penalty. Compensation is a normal business expenditure allowed. Expenses of 20 lakhs incurred on replacement of carpets in the foyer lounge and bar. Why it is not a capital expenditure? Replace, that's the word I want. That's the word our friends also are saying. Replacement, TVS motors. Replacement does not bring a new asset into place. It is not a capital expenditure. Amount of 4 lakhs equal to 5,000 euros was remitted and paid to a travel agent resident of UK as a commission for booking international tourists in the hotel. Tax at source was not deducted out of such payment. Fully
100%
disallowed.
disallowed.
I take that answer. I take that answer. Is there an alternative answer?
Sir, he is not having any base at India, non-resident. Then it is allowed.
Okay, I take your answer, Hari. No, okay, I take that answer. Not fully disallowed. In the year of default rectification, you are allowing it then. I have overruled that.
There is no TDS default, sir.
Yeah, I got your, now I am happy that you are recollecting. Maruti Suzuki case law said, yeah, as you are all, as Hari and people were telling. In Maruti Suzuki case, it is held where the non-resident is not having a permanent establishment in India. For him, he is rendering services for UK citizen. Some UK citizen approached him and said, a group of people, we want to have a tour in India. He contacts a hotel, he gets commission. There is no business connection. Where the non-resident does not have any business connection, income accruing or arising in India, and he does not have a permanent establishment in India, tax need not be deducted at source. It can be allowed. I take both the answers. 100% disallowed, write the justification. Right, however, in Maruti Suzuki case. Or you can write Maruti Suzuki case, so it is allowed. However, had they give both the answers so that the examiner knows. Whenever the previous question, fifth question is a case law question. Sixth question, if they give this adjustment, they are coming to a case law only. They want you to quote that case law. You disallow and quote or allow and quote, give alternative things. Amount of 40,000 each was paid in cash to the suppliers of vegetable, milk product and eggs on 11th Feb because of suspension of banking operations due to strike of bank employees. Allowed any payment on a bank holiday, okay, is allowed because as he said, it is essential, necessary payment. Amount of 5 lakhs was written off in 16/17 as irrecoverable from a travel agent. An amount of 2 lakhs out of it was recovered and credited to reserve account. income. Section 41, deemed income. Recovery of bad debts is a deemed income. Okay. The firm employed 75 workmen during the beginning of the previous year. Each workman is paid 8,000 per month till December and 10,000 thereafter. Out of 75, 15 were employed through contractor. What is the provision coming to?
80 JJAA.
Okay, 80 JJAA. Our friend is right. Okay, 80 JJAA. Remember, if I employed through contractor, PF I would not. What are all the conditions of 80 JJAA? Should be more than 240 days. So beginning of the year itself, they have okay. Salary should be less than 25,000. Yes, fulfilled. Employees should be covered under PF. But here, we are employed through a contractor. So it is not covered under PF. Not covered under PF. So only 60 employees, their remuneration into 30%. Compute the income chargeable, giving brief reasons for the treatment. Before taking the pen, we should be very clear about what the question is. We can spend so much of time in reading, understanding every provision. But when we take the pen, we know what we are going to write. Go ahead, please. Go ahead. It is about how good we write our answers. Every adjustment, we need to communicate to the examiner that I know what it is asked for. So our answer goes like this. Net profit 2 crores. Excess depreciation charged for building. Normally the rate of building is 10%, but that has been charged at 15%. So 5%, that is 25 lakhs disallowed. Promotion of family planning is only allowed for Indian companies. Advertisement in the political party souvenir will be taken as donation. It will not be allowed in the souvenir of political party. However, you can claim 80 GGC. Whenever there is no case law or other things, the common word you should use is, however, it is incurred in the regular course of business, like that. Okay. Compensation paid for termination is in the regular course of business, hence allowed. TVS Motors case, replacement is not a capital expenditure, allowed. I have disallowed, you might have allowed it and written the alternative opinion. I have disallowed and written the alternative opinion. Yeah, you can. I'm not saying for everything you can write refer note 1, refer note 2 and write the entire thing in notes. No problem. Rule 6DD gives us the exemption. Normally it is disallowed, but if it is on a emergency payments on a bank holiday, essential payments on a bank holiday will be allowed. Bad debts are recovered. When it is allowed earlier, now recovered, it is taxable. I'm getting a gross total income of 2 crore 32 lakh 50,000. 2 crore 32 lakh 50,000. 80 JJAA computation goes like this. The additional wages paid is for 60 employees because 15 employees are working through contractors, so PF will not be paid by him. 60 into 8,000 into 9 months, April to December, 10,000 into 3 months of that 30%. May I? Anybody still doing? I'll wait. This is one of the finest question again. Question number 10. MNO Corporation LLP is carrying on two businesses, namely textile manufacture and operation of cold chain facility. Gives you the following particulars as on 31st March. Net profit as per P&L for textile and cold chain facility. The following are debited. Interest on capital at the rate of 15% on the total capital of 1 crore. Working capital, working partner's salary 36 lakhs. Depreciation on textile factory building. Depreciation on plant and machinery. Keyman insurance policy paid. Eligible depreciation are 27 and 4. The assessee has set up and operating a cold chain facility from 1st April 2020, incurred capital expenditure towards construction of cold chain facility during the period as under cost of land 30 lakhs, cost of construction of building and machinery 80 lakhs. The income of the firm for the financial year 2021. Okay, for the financial year 2021, income from textile manufacture, income from cold chain facility before deduction. So even if you don't know cold chain facility is 35 AD. Somewhere they will give you either the section number or it is a specified business. They will okay. The firm had originally 4 equal partners. One partner retired on 31/3/21. The partnership deed authorizes payment of salary and interest on capital which are debited to P&L. You are requested to compute the total income for FY 22-23 ignoring AMT provisions. Read through. Even though 35 AD is there, they don't want AMT. Read through. First, we should do 2021's specified business because that loss can be set off only against income from specified business. That's why they have given the information of 2021. Question number 10. Computation of income of specified business 35 AD for the financial year 2021. I am not doing 21-22 now. I am doing 2021. Income before allowing 35 AD. Income before allowing 35 AD is 60 lakhs. Expenditure under 35 AD. Cost of land not allowed. You cannot claim cost of land. Cost of building and machinery. Loss from specified business to be carried forward and adjusted only against income from specified business. Up to this, you understand? Up to this, you understand? Now, Antonio, you're clear? Okay. Now, all of us listen. All of us listen. Out of the 4 partners who are there on 2021, 4 equal partners, 1 partner retired. According to section 78, where there is a reconstitution due to retirement or death of a partner, share of loss of such partner cannot be carried forward by the firm. Out of the 4 partners, 1 partner retired on 31st March 21. Hence, only 3/4 of the loss can be carried forward. According to section 78, loss pertaining to the retiring partner cannot be carried forward by the firm. Okay? Whenever in the question of a firm there is a retirement, they are speaking about loss carry forward. Loss pertaining to the retiring partner will not be carried forward by the firm. Are we clear? Okay. Now I am going for current year working. Computation of income of FY 21-22. Net profit from textile business 10,25,000, from cold chain 20,50,000. Excess interest on capital according to section 40B, the maximum can only be 12%, where the deed specifies more, such excess will be disallowed. So what happened? 100 lakhs into 3%. Partners remuneration, depreciation charged as per books, human insurance premium is allowed as an expenditure. There is nothing to disallow. It is allowed as an expenditure. Depreciation as per IT law, 27 plus 4, 31 lakhs. Are we getting 78 lakhs 75,000 as book profit? 78 lakh 75,000 as book profit. Maximum permissible remuneration. Maximum permissible remuneration. As per deed, they have said 1 lakh per partner. Okay, that is what is this? 36 lakhs. As per deed, 36 lakhs, 1 lakh per partner. So 3 partners are only there now. As per Act, please understand, 75 lakh 75,000 into 60% plus 2 lakh 70,000. Up to 3 lakh 90% is 2 lakh 70,000. On the balance into 60%. So this minus 3 lakhs into 60% plus 2 lakh 70,000. Am I clear to you? Okay. Less brought forward loss of specified business. I'll prove you also. I'll prove you also. Yeah, okay, Hariharan. Perfectly, sorry, just now I saw. What I mean, I'll prove. Yeah, I got your point. I'll prove it. Okay. The question is, do you think that this 4275 is wholly okay? Test for income from specified business. Okay, net profit of specified business is 20,50,000. Net profit of specified business is 20,50,000. Even if I take the full interest and remuneration is from specified business. Okay, the only adjustments are interest, remuneration. Depreciation is only for textile. They have given depreciation in the book. They are in the question. They have clearly given it is for textile. Even if I take, we all know a part of the remuneration should go to textile business. But let me go to the wildest assumption. Okay, if entire interest and remuneration is paid exclusively from specified business, what happened? Excess interest is, we all know that we disallowed 3 lakhs. Excess interest we disallowed 3 lakhs. Okay, no change or impact due to remuneration because we added 36 lakhs and reduced 36 lakhs. Therefore, specified business income will be 23 lakh 50,000. Even this is sufficient. So it's more than 15 lakhs. This is more than 15 lakhs. You can set it up. You have sufficient income. Yeah. But remuneration and interest, when the question appeared, our friend was saying, can we do specified and non-specified separately? When this question came in the examination, before release of suggested answer, I was doing like that. Where did I thought there is a clue here. 1:2 should be the ratio. 10:25 is textile business, 20:50 is cold chain. So 1:2 ratio. So I disallowed also 1:2, allowed also 1:2 and did. But when the suggested answers came, I saw that they have straightforward answered it without much. They have said there are sufficient profits, so you can allow. The question is, to test you on, you should do 2021 also. But more importantly, carry forward of loss, you should not carry forward 20 lakhs because one of the partner is retired. Scroll down, yeah.
Sir,
Listening?
here the income is more, sir. What if it is deficient after allowing all the
Only
expenses?
to that extent. Suppose this comes to only 10 lakhs. I would have only reduced 10 lakhs here.
Okay, sir. Thank you, sir.
Sir, I'm sorry, but can you explain why we did this again?
Which one? This one.
Yes, sir.
So we compute the specified business income first and then set it off against the total income, sir, or
Yes,
we do it
yes.
and then test.
No, you can do like this. No problem. You can
Okay.
just, if at all you get it here, you can go back and change your answer.
Okay, sir. Thank you, sir.
Ananya, why we did this is, loss from specified business can be set off only against the income from specified business. I have 15 lakhs of business, but this 4275 is both specified and non-specified business. I need to identify whether specified business has sufficient income so that I can set off the whole 15 lakhs. So I tried to find out actually excess interest of 3 lakhs. Even if this is not there, I still have 20 lakh 50,000 as an income. So I can set off that 15 lakhs fully. That's why we did this entire provision.
Okay, sir. Thank you, sir.
HIG, a firm consisting of three partners, namely H, I, and G, carried on the purchase and sale of television sets in wholesale and manufacture and sale of pens. Additional depreciation, yeah. Under a deed of partnership executed in 2011. H I and G were partners in individual capacity. The deed of partnership provided for payment of salary amounting to 1,25,000 each to H and G, who were working partners. A new deed was executed on 1st October 21, which apart from providing for payment of salary to the two working partners, which is already mentioned in the original deed, for the first time provided for payment of interest of 12% on the amount standing to the credit of the capital accounts of partner, and the deed is amended with a retrospective effect from 1st April 21. I will only provide under income tax law for 6 months. Whatever is their capital account into 12% into 6 by 12 only. Though they have said it is from April, any amendment can only have a prospective impact. Due to differences between the partners, the firm was dissolved on 31st March 22 and the capital assets were distributed on 20th April 22. The net profit after payment of salary to the working partners and debit and credit of the following item was 150. 1. Interest amounting to 1 lakh paid to the partners on the balance standing to their capital account for the whole year. 6 months interest should be disallowed. 12%, fortunately it tallies. So 6 months interest should be disallowed. Interest paid to 50,000 on the balance standing to the credit of their current account, wholly disallowed. Only capital, wholly disallowed. Interest amounting to 20,000 paid to HUF of partner H at 18%.
Loan given by representative of the partner.
Okay. Continue your answer.
It is allowed, sir.
Allowed. 40A2 is the governing session, not 40B. Up to 18% allowed. Payment of 25,000 towards purchase of television sets made by crossed check. Disallowed. Okay. Cross check is an unapproved mode. Cross check is an unapproved mode. Huh? Yeah. On a single day, they give date. 30,000 being the value of gold jewelry received as gift from a manufacturing for achieving sales target. It is a business income. Perquisite. Fair market value of the perquisite will be taken. Depreciation amounting to rupees 15,000 on motor car purchased and used exclusively for business purpose, but the car is registered in the name of a partner. That's beautiful. Sivakami and Co. Beneficial owner is the firm. A. Sivakami and Co. Beneficial owner is the firm. You can claim. The firm can claim the depreciation. Interest amounting to 25,000 for received from bank on fixed deposit made out of surplus funds. Taxable under IFOS. Taxable under IFOS. Interest amounting to 10,000 received from bank on FD made for the purpose of providing bank guarantee. This is taxable under business or profession. This is essential to find that book profit. Either K and Co. The eighth adjustment is K and Co. because for providing guarantee. Whereas the seventh is surplus funds. So IFOS. Additional information. A new machinery was purchased for which division? Pen division, which is a manufacturing division, on 11th November 21 for 5 lakh. Depreciation for the same is yet to be provided. For all other assets, it is provided as per IT law. On further analysis, you also understand a similar machine was purchased, in November 2020. This is November 2020.
Additional depreciation of 10% can be provided in the second year.
Superb. As well for 7 lakhs. The additional depreciation for this mission, you should provide the current year depreciation normal 7.5%, additional 10%. And for this mission, additional alone, last year they would have only claimed 10%, the balance 10%. Closing stock was 60,000, whereas the net realizable value is 75,000. I take something more. Adan Raja. ICDS 2 says a firm under dissolution. Again, we have to read this question from the top. Due to differences, the firm was dissolved. ICDS 2 says, if there is a dissolution, it should be valued at net realizable value and not on add that difference in. Read all the adjustment ones. Read all the adjustments. Read the question ones. You can understand that in examination question paper, in our size, font size, how lengthy the question would have gone. But maximum நீங்க ஒரே ஒரு தப்பு பண்ணிருக்கலாம். இந்த NRB, you would have, ICDS 2 would not have striked. Otherwise, you would not have done a mistake. Majority of the adjustments you were able to tell. Don't allow the length of the question. ஏன்னா the first storytelling part ஒரு full page க்கு போகும். The storytelling part itself will run for a full page in our examination question paper. Is a dormant partner. No remuneration is paid to him. Interest can be paid to I. But remuneration is not paid.
Sir, can you please explain adjustment 8, sir?
1 minute, Raja. Adjustment number 8 is A and Co, a case law in PGBP which we saw. That is where the interest is intricately related to the business. For providing bank guarantee, you need to make the deposit. Unless the deposit is there, the bank guarantee cannot be given. Unless bank guarantee given, you will not get the order. So the interest is on the bank guarantee deposit. It should be treated as business income.
Okay, sir.
Whereas interest out of surplus fund invested is IFOS. Somebody else was asking me. Okay. Yeah, 1 minute. Also, I would like to recollect that there are two case laws, interest versus PGBP, Rama Multi-Tech, where share application money we kept it deposited, mandatory business income, set off panikala. Okay, yeah, scroll down. Yeah, what is that next? Raja? Okay, sorry, I left the question halfway. Business brought forward loss 50,000. Fair market value of depreciable capital asset and their book value. Do not worry about it. I'll tell you what it is. Okay, do not worry about it. Business loss is essential. So we are starting to working, but one nuance which we might have missed. Okay, எல்லா adjustments 1, 2, 3, 4, 5, 6, 7, 8 they have given the adjustment. One adjustment they have inbuilt in the paragraph. After payment of salary, they have given the net profit. So we should add back that salary also. Normally, they would give salary charge as an adjustment. But here, they have given on the top what is the salary. 1,25,000 for each of the partner. Two partners only are eligible for salary, HLG. Okay. And after payment of salary only, they have given the profit. So we need to be really cautious there. Computation of business income of HIG firm. According to section 40B, any amendment to the deed will only have prospective effect and not retrospective. In the given case, 12% interest on capital is amended as on 1st October 2021. Hence, interest can be paid only for 6 months.
Sir, will any question in this kind provide details to calculate the partner's capital account balance, sir?
Either after 40 minutes I will answer this question, or tomorrow morning. The next question is like that. That's why I said
Okay.
that I will. Okay. Yes. The doubt is, she asked is, in this case they have given 1 lakh. Is there a possibility that they will just give the capital account and say that the deed has been amended, etc., and we need to, they have done in a particular calculation, we need to do in a differential calculation? Yes, possible. We have a question for that. I'm taking you in baby steps so that you are very clear about that. Because in firm, ஒரே adjustment தான் firm கேட்க முடியும், interest and remuneration. Other than that, firm related, the money capital expenditure on family planning, revenue expenditure, that's all. Okay. Otherwise, what we are doing is absolutely PGBP. So yes, Ananya, the answer for your question is yes. I will do that. Don't worry.
Okay, sir.
It's not allowed as it is not authorized. When you have a capital account, it's only on the capital account balance and not on the current account balance. When you have what is popularly known as fluctuating capital account, you don't have a fixed capital account, you have, in that case, on the opening balance you can claim. But normally fixed capital and current account, capital account, current account, only on the capital account you can, current account you cannot. This question came in the year in which they said crossed check is not account payee check. Account pay, அதனால immediate, always if there is an amendment there or a clarification, there will be immediate question. They have already credited it. The question itself says, after debiting or crediting the following, since it is already credited, no issues. A. Sivakami and Co., the beneficial owner can claim the benefit of depreciation. It's already credited, no adjustment. It's already credited. A new machinery was purchased for pen division. Depreciation for pen division machinery, manufacturing on asset purchased and put to use for less than 180 days. On asset purchased and put to use for less than normal depreciation, it comes to 5 lakhs into 7.5%. Additional depreciation at 10%, 5 lakhs into 10%, 50,000. Additional depreciation at 10% on machine purchased and put to use for less than 180 days in the preceding year, 2021. Only 10% would have been claimed in that year. Balance can be claimed now. They would have claimed. The question itself says, is yet to be, a new machinery was purchased on a 5 lakhs, depreciation is for all other assets it is provided. So don't worry about normal depreciation for that 7 lakhs. They would have claimed, only additional you need to claim. According to ICDS 2, okay, in the case of dissolution of a firm, in the case of dissolution of a firm, stock has to be valued at net realizable value. In the given question, it is valued at cost. So I'm increasing by 15,000. Book profit. Check it out. I'm getting 357,500. Maximum permissible remuneration. As per deed, 1,25,000 for each partner, two partners. As per Act, 3 lakhs into 90% plus 57,500 into 60%. Computation of total income. Business or profession as computer. The final note is what is going to be important again. This is under the new law also, this is the same note. Okay, according to section 45 subsection 4 read along with section 9b, distribution of assets by the firm to the partners is taxable only in the year of distribution. In the given case, it is distributed in April 2022, hence taxable only in 22-23. Sorry, I missed this out. So only in the year of distribution that is taxable, even under the new law, though I have not yet come to you for that, but only under the in the year of distribution is taxable. We'll continue tomorrow from the next question, which is also of similar nature, which is very interesting question again. Okay. Tomorrow our focus will be firm completion, AOP BOI completion. Okay, AOP BOI is a small area to complete, but firm has some special questions also we have designed. So that also we will complete and complete AOP BOI. Meet you 6 o'clock tomorrow, hopefully both physical as well as live online if climate permits. All the best.